Our market monitor tonight says he is sticking with high-quality, large-cap names in this relatively more volatile stock market environment. He's Ed Cowart, portfolio manager at Eagle Asset Management. Ed, welcome back. Good to have you with us. Give me your overall view of the market today and after a rough start to the year, but a pretty good February overall.
Well, sure, and thanks for having me on, Tyler. I guess you could say it's been a rough start for the year, but if a person had gone to sleep the 1st of January, just woke up today after a 7-week nap, looked at the market, you'd say really nothing much had happened, because we are, after all, within about 4 or 5 points of the close on the 1st of January. So, as we all know, those of us who've been awake, is that we had a pretty scary plunge into the first week of February, then a rally, which seems to me very much of a kind of the type of rallies that we've had for the last couple of years. There's some event out there. In this case, it was concerned about the emerging markets.
Right.
Knocks the market down very quickly, and then we get a rally right back.
Quick thought on how the market may evolve over the next 10 months.
Well, I think that most of the factors that determine stock prices and stock direction are positive. We have corporate profits at an all-time high. The fourth quarter actually saw some acceleration in corporate profits. The Federal Reserve, although this is not their purpose, it wasn't why they developed the program that they did. The objective outcome has been very supportive of asset prices.
All right, let's get to some of your stock picks, beginning with Microsoft. Make the case for it quickly.
Well, the story here is a new management who is going to take a look at this very complicated, very involved technical company, refocus it, and begin to squeeze not great growth out, but more growth than we've seen lately. Plus, there is a good opportunity to return cash to shareholders. We have on the board I would say a more quiet activist who I think is going to push the company in that direction.
And who is that? Who is that?
It's Value Track is the name of the company, who has a little less than a 1% stake in Microsoft, and who has been instrumental in kind of getting the company moving, I believe, in the direction of returning cash to shareholders.
All right, let's get to your
20% dividend increase.
Let's get to your next two in the minute we have left. Number one is LyondellBasell, and the other is Emerson Electric. Give us a double play here on those two.
Yeah, the LyondellBasell, the story there, this is a chemical company. They make plastics. They make the precursors for plastics. They are a real beneficiary of the low-cost natural gas in the U.S. Their European competitors are being sourced at Brent at 110. On an equivalent basis, Lyondell's feedstock costs about $30. So it's a tremendous advantage for this company.
And Emerson?
Emerson is a very well-run industrial technology company. Everything they do is oriented towards taking costs out of the manufacturing process. Again, both of these companies have raised their dividends consistently over the years. We think they're going to continue to return cash to shareholders. We think that in a world that's constrained for income, that all three of these companies are a way that you can not only have an above-average dividend yield going in, but you can grow that yield as well.
Do you have any disclosures to make on any of those companies, Ed?
Well, we own all three of those companies in our growth and income fund, Tyler, and I own shares in that fund.
All right. Thanks very much, Ed. Have a great weekend. Ed Cowart
thank you.
is portfolio manager at Eagle Asset Management.